let's start off with some of the better performing bourses. Nigeria, I mean, there we've seen the market trading in the positive, I think, relatively all of last week. People a little less skeptical about the outcome of the elections, now focused ahead. But it was a modest gain of about 1% in dollar terms for the market overall. What are the drivers?
Yeah, I think Loato, after the elections, it's made a massive difference. Last week we looked at Q1 results that were coming out. Generally, Tier 1 results, the consumer names were positive. The other big thing in the market was the sovereign wealth fund that's come into effect. Obviously, we saw before the elections that this was quite a big issue. The credit rating agencies decreased the outlook in Nigeria. So going forward, we'll obviously have to see what they're going to use the money for, but that was a big driver this week.
Okay, we'll be analysing that later on the programme. Let's talk about dollar demand, which is rising. We'd expected it to wane post-elections as people are a little more certain about the political conditions. But why are we seeing a bit of depreciation there?
Yeah, it's been rather strange. Obviously, prior to the elections, we saw huge dollar demand, and this waned for probably the last 2 weeks. And all of a sudden, I think just general economics from a worldwide perspective that have influenced that. Nothing specific in Nigeria that's happened this week.
So you're not really worried about any sort of issues around prospects for further monetary tightening now that the MPC will be meeting next week? You're not worried about the Naira? You think the fundamentals are okay?
No, I think the fundamentals are exactly the same as they were before. So no, general market consensus is that there's no danger on the downside there. So no.
Staying in West Africa, let's talk about Ghana. It's been relatively flat, but in general, it's a bourse that performs fairly well. Why is that?
Ghana's obviously got oil coming online later this year. Besides the oil, well, the other big thing that came about this week was the MPC decreased interest rates. It was expected to stay the same. So that was the big news out of Ghana.
Okay, it was a bit of a surprise move, the decision of the Bank of Ghana to decrease the prime rate. Why is that? Are they on a growth trip that many other central banks are on as well, trying to stimulate growth as opposed to manage inflation?
Well, I mean, general market consensus was that wasn't going to happen. So growth this week, Stats Ghana released their growth figures, which actually for 2010, which surprised on the upside. Going forward, 2011 results are expected to surprise on the upside too, definitely double figure. So no, it's contrary to what the market was expecting. So a bit of a surprise there from our side.
Another good performance in the last week, Zambia. We're seeing liquidity back in the financial markets, a positive outlook for copper, which should also mean a positive outlook for the kwacha as well.
Yes, obviously copper is a massive driver in terms of the economy in Zambia. I think this week the demand and the fundamentals have always been there. This week the difference is that we've actually seen some supply come into the market, so we've seen the volumes go through, and the buyers have had to pay a bit of a premium, which has pushed the market up. So yeah, a bit more liquidity that's driving the prices up.
All right, let's talk about the ones that suffered a little bit in the last week. The worst performer was the BRVM. Now, what is going on there in Cote d'Ivoire? Because we now have a resolution of the political crisis and we should see the markets reopening, but we had seen the stock exchange suspending activities, even withdraw. What's the current situation with the capital markets there?
Yeah, it's quite difficult. Obviously, everyone in the BRVM is moving around, trying to get their operations back up and running. Today we actually saw the market move back to Abidjan from Mali. The big problem over the last few weeks was the markets essentially were open, but from a custodian point of view, you weren't actually able to trade. SocGen is the biggest custodian there by a long way, and they actually went operational. So there were buyers, there were sellers, they weren't actually able to trade. What you find now is there's not much liquidity in the market. There's the limit to the movement on a daily basis, and because given what's happened, the buyers are far below where market is. There's not actually that much trade going through. When something does go through, it's at far below whatever the last traded price was, meaning that the market takes a bit of a pounding, as we've seen over the last while.
We've also seen the JSE take a knock, and that's reflected with the situation in Namibia as well. In dollar terms, the JSE has declined 4.5%, in local currency terms 2.9%. What is the situation here? 2 weeks ago, we were told of risk aversion generally creeping into the global markets because of rising inflationary pressures and subdued economic growth. What's happened in the last week?
Yeah, I think South Africa, as usual, is a victim of what's happening in the world. Obviously, the concerns out of the EU with Greece, Spain, etc. The fact that China increased the minimum requirements for in the banking, that's obviously going to put a bit of dampener on the economy there. Obviously, China driving the worldwide economy, so another down.
Okay, we've run out of time, but very briefly, I mean, Kenya is also under a lot of pressure at the moment. It's a depreciating shilling, it's all those inflationary pressures, fuel shortages as well.
Yes, I suppose relative to the rest of the markets in our universe, Kenya's not looking as positive as it was last year, when it was a incredibly strong performer. Inflationary issues, food pressure, fuel price inflation. The key driver in Kenya is the private sector demand, private sector consumption, and with fuel prices and inflation, etc., that puts a serious downward pressure from that side.